All right, hello, welcome everybody. Welcome to Talking Investing. I'm Tom, and today George is sick. So George will not be joining us on the live stream today. He called me last second. He was going to try to play through it, but he's too sick, so he is taking the day off. And he might be sick due to the fact that Bitcoin did not have a good day today. Bitcoin did not have a good day. The Bitcoin miners did not have a good day, but I hope that you guys had a good day, and let's talk about it. So give me just a second here. I'd like to start out by welcoming all of our members. I see a lot of members in the chat, so thank you guys so much for joining us on the Friday live stream. Thank you to everybody else as well, and also, if I could, please ask everybody to smash the like button. It would help out the stream a lot. We are playing down a player today. We don't have George. We had a bad day with Bitcoin. We demonetized ourselves, so you guys don't have to deal with ads. So do us a favor, do me a favor, and smash the like button so that we can get some people here on this stream. We got 16 likes right now. Let's try and get it up to, for starters, let's try and get it up to 100 and see where we can go from there. We were getting 500 likes on these streams, so you know, one of the things is, this is a part of the overall, a lot of people are getting lulled into submission here. This has been months, we're multiple months into Bitcoin stuck in a channel, and we're near the bottom of that channel. And every single time it seems like we're about to maybe get out of this funk, you know, we have a day like today. And so, you know, I'm going to put a poll up and talk about how much longer is this going to go on? And then I'm going to share some of my thoughts. I got some articles on this as well as to just how much longer this can go on. I see, and sorry, I do have, especially when I'm alone, I have a hard time keeping up with the chat, but it just jumped out at me. Summermelon Gaming said, sorry for the negativity, guys. So I'm not sure what Summermelon Gaming said. And thanks for being a member, by the way. But you know, this is the thing. Whatever you said, I'm sure you're not alone, because this is brutal. Today was a very rough day. You look at, I'm going to go through the Bitcoin miner big board here for a second. Taking it from the top, the top three by market cap. Marathon was down 12.67% today. Riot was down 10.5%. So those got, those got destroyed today. Cleanspark was down 6%. And that was a late day. Cleanspark was up 7 or 8% this morning. And then it settled down at around 0. Then it was down at about 2%. And then all of a sudden, boom, it finishes the day down 6%. Bitfarms down 7%. I mean, other than a massive outlier in DMG, which is a nano cap stock, that was up 18%. Other than that, this was just a very brutal day. There was a couple that were, close to 0. HUT was down 1.9%. Hive was down 0.8. Bit Digital 1.8. But you got, big caps and small caps. You got some of the small ones. Stronghold down 9%. Mawson down 11%. MicroStrategy down 6.5%. BitX, which is, the futures 2x leverage on Bitcoin, down 5.9%. I mean, there were very few places to hide today. So I'm guessing a lot of you guys had a rough day today. I know I did, and I'll tell you, these days are disheartening because the market opened here in the U.S. when the U.S. equity markets open. So as always, I have a gold line here where Bitcoin was when the U.S. equity markets closed yesterday. So you can see pretty much from the close of the market yesterday, Bitcoin ran up, and it stayed up all the way into this candle, this green candle right here, up near 63,000. Bitcoin got over 63,000 after the market opened today here in the US. So, for a brief moment, it seemed like things were going very well. And then, of course, the rug pull comes. You got these are 15-minute candles. You got 1, 2, 3, 4 15-minute candles. And, if I measure those from top to bottom, so that's an hour, right? That's a bad hour. That's down $2,367 or 3.75% in 1 hour, and it changes the whole dynamic of everything. And then really from there, I mean, we're literally almost to the dollar where we were at that point. So after that first hour, you know, we went down a little, we pulled back up, but you know, it was pretty much sideways the rest of the day. But the Bitcoin miners just continued to kind of erode and erode. Midway, thank you very much for the super chat. Thanks for the super chat on a super tough day. So it's much appreciated. I appreciate all you guys kind of hanging in there and sticking in and joining everybody and getting together. These are the most important days to get together. Let me get to what Midway had to say. Again, thanks for the super chat, Midway. Although today was a very annoying day, this week wasn't totally bad across the board. Coors, Iron, and Wolf were able to ultimately have a green week. Yeah, and that's going to be the funny thing. When I do the weekend update and compare, you know, week over week, none of these stocks really had an awful week. Some of them were in the green. The ones that weren't in the green, for the most part, were only down a little bit. It's just, you know, these are the psychological games they play with us. You know, for instance, Marathon was up, you know, it was through the roof. It had a day where it was up 18%, and then it trickled all the way down. I'm just going to quickly go to the Marathon chart, which I think I have open. Right, this was Monday. So here's where we closed on Friday. So if you look I really got to zoom in to even see the difference. Week over week, you know, Marathon was down 1.8% this week, but it was down 12.5% today. So, you know, you had this giant gap up on Monday, and then it just eroded. So Tuesday was down, Wednesday was down, Thursday was down, and then a giant red candle on Friday. So it's very disheartening. So to Midway's point, a lot of these ended up pretty close to where they started, and some of them, I'll pick Iris Energy out of the three that Midway just talked about, just to grab a look at one of them. And, you know, so if we look at last Friday, and you got to zoom in because these moves were small week over week. So, but they get us intra week. You know, they get. It's almost like they're toying with us, and they're toying with people's emotions, and all too much trading is done on emotion. And you know, we're human beings. But so here's Iris Energy. Closed on Friday, last week versus this week. So actually up 1.5%. So we'll go to TeraWolf and take a look. So for TeraWolf, from last Friday to this Friday, up 2.3%. And you can see, here's a great one. Like if you're a swing trader, like look what TeraWolf is doing. Look at this channel. I mean, and now a little bit of sideways here, but you know, so if you're a swing trader, and I don't do a lot of that, you guys know I'm kind of a buy and hold. And I keep saying I'm going to do more swing trading, and I haven't. So I'd like to, you know, with these, being that I don't know how long this is going to last, there's a lot of people that made a lot of money. This is a great trading channel right here. And it's not the only stock that has this. I just happen to have it pointed out on this one. Yet I have not traded this at all. So, you know, this has been, if you bought at the bottom, sold at the top, vice versa, I mean, this has been solid gold. But back to the point of the matter was, you know, here's TeraWolf. Actually, it was up on the week a couple percent. So down 5.5% on Friday. It feels awful. All this feels not good. I'm just, you know, that's just reality. I think it's so crucially important for everybody to remember, like we're investors, and that's what we're here talking about. But, you know, it takes a human toll, and, you know, this is only hopefully one small aspect of everybody's life, but it's money, and, you know, money's different. So, you know, it's when your portfolio is going down, it feels like you're losing money. And so again, obviously, you know, the old saying, if you haven't sold anything, you haven't lost anything. Now, if your conviction has changed, and we got a lot of information this week. So if you looked at that information and your opinion has changed on the fundamentals regarding, you know, we had Marathon, you know, over the last couple of weeks, we've had Marathon, Riot, Cleanspark, Core Scientific. Those are the 4 largest Bitcoin miners. Also, Cypher has reported. So we've gotten a massive amount of information. We're going to dig into some of that information too. And some of it you guys may have liked, and some of, from some others you may not have. I think some of them have been a mixed bag. Some are better than others. I thought there was, of the big four, from an income statement standpoint, I will say I thought there were two standouts out of the, I'm just, for the big four right now, when I say that, I'm referring to, Marathon's the largest by market cap, but, from going from all things considered, Marathon, Riot, Cleanspark, and Core Scientific, depending on which way you measure it, those four are kind of at the top of the pack. There's four others behind that I think are going to have a big year as well, most of which haven't reported yet. Those are all coming next week. Some of them on Monday, some of them on Wednesday. I'll go through. I have a chart of when everybody is doing their earnings. So, I was up half the night listening to earnings call last night, taking notes, going through financial statements, trying to get my bearings on both Cleanspark and Marathon. And there were some similarities and some major differences between those two in particular, and then I did some analysis comparing them to Riot and Core Scientific. And, all these companies they're all in different places. So I'll just tell you right now, to me, and, this should come as no surprise to anybody, out of the four, I thought that overall balance sheet and income statement combined, I thought Cleanspark was the hands down winner. But I will say, from an income statement standpoint, I think Core Scientific is performing at a very high level. And the market really liked, I'm going to go to their chart. The market liked their report yesterday, and I can see why. But, there's balance sheet and income statement. So when you look at balance sheets, right, Core Scientific is just not in the same league as a Marathon and a Riot. And Cleanspark has put themselves in that league. Cleanspark has, I'm going to try and remember off the top of my head, but I think they have $1.54 billion of assets against maybe $75 million of total liabilities. So, that's a balance sheet. That is a strong balance sheet. Now, it's come at the cost of dilution, and I'll take a look at some of that as well. But I will tell you, one of the things, I talked about some of the main things I was looking for going into these earnings calls. And one of the big things that I was looking for is, I see George in the comments section. So hello, George is at least with us here in the comments. George, drop down if you want to invite, but I know that you are not feeling well. So at least welcome to the comments section. All right. Sorry, I distracted myself, and I'm trying to read a few of these comments. Like I said, I do have a hard time keeping up with the comments section on my own, but I do want to get, so let me just interrupt myself, and I want to get a poll going. Give me 30 seconds. Sorry, guys, I'm just typing a poll. This takes me just a second. Okay, so how long until Bitcoin hits a new all-time high? So remember, Bitcoin just hit a new all-time high in March of 2024. So that was prior to the halving, first time that ever happened. But here we are now, several months later, and we're not back there. So, less than 1 month, are we going to get back to this new all-time high sometime in the next month? Are we going to break out of this funk? Are we into 1 to 3 months of sideways activity, 3 to 6 months, or more than 6 months? And I use these time frames because, you know, I don't know. None of us know the answer to this, obviously, with certainty. But if you look at previous cycles, all of these things are distinct possibilities, right? It's taken different amount of times, and it's never been immediately. So the expectation that we were going to go straight to the moon, you know, as simultaneously with the Bitcoin halving was probably not a realistic expectation. This performance is worse than I was expecting. I did think we would continue to creep up and be a little higher than we are right now, but we're very much doing very similar to what's happened in the past. And I want to go to an article that talks about that. Give me just 1 second and let me find that. Okay. Okay, so it's another one of these. Why almost everyone was wrong about the Bitcoin halving. Okay. So they proposed, I'll just kind of summarize this because one of these things I think is nonsense. And the other thing I think just goes right exactly to this poll, this question. They talk about, on the face of it, the drop is puzzling. So I don't really think that it is puzzling. One possible reason, and this I totally disagree with. We've talked about this before. I don't remember if it was a members-only live stream or a Friday live stream for everybody. Also, I'm going to interrupt myself. If you could do us a favor and just please smash the like button. It does help the live stream out in real time. We need all the help we can get on this miserable down day Friday. So JP Morgan came out and they had a strategist, and I won't even try to mispronounce this individual's name, that the halving was already priced in. The JP Morgan analyst already saw Bitcoin as well above their volatility adjusted comparison to gold, which would imply a price of $45,000. So they went through, I read this report. It was a whole report on how they thought the average cost per coin across the network was going to be $45,000, and that was a reason that Bitcoin was going to gravitate back down to $45,000. That line of reasoning makes no sense to me at all. Then why wouldn't Bitcoin always be at that price also, right? I mean, then, you know, there's no precedent for that. It never made any sense. I felt like it was FUD at the time. So they go on to say, or a more bullish explanation could be that previous Bitcoin halvings have led to a more delayed cycle of price rises. So, quote, the recent halving event has led to short-term downward price movement, a pattern observed in previous occurrences. Following this, there's typically a 9 to 12-month period of upward momentum leading to the peak of the market cycle. So that goes right there. This was from Matteo Greco. Hopefully I pronounced that at least reasonably accurate. Research analyst at Finequa International. I'm sure I mispronounced that one. Okay, so to me, that's what makes more sense. So the question is how long, right? There has been a period of time. It's not having straight to the moon. We've had 3 months, 6 months, 9 months, and then a period of sometimes, 3, 6, 9, 12 months to get to, the ultimate peak. So, there were a lot of reasons, all of which, I think make some sense. This cycle has been a little different in many ways. The ETFs came in and, they broke every record under the sun for ETFs, and, they ran the Bitcoin price up to a new all-time high prior to the halving, which has never happened. But now it seems like we're settling a little bit more into what is a traditional cycle that mirrors the previous cycles. And no two cycles have been the same. And, there's lots of geopolitical stuff. There's a lot of economic stuff. You've got, here in the U.S., you've got an election year. There's an endless list of things that, may impact all of this. But in general, the cycles have resembled each other quite strongly in the past. Again, not identical. But I think this, this is a more reasonable answer to me. This concept that, we were overbought and Bitcoin's fair value is 45,000. I don't see that. I don't think that makes sense. I don't think we're going to ever see 45,000 again. Now, I won't say that definitively because you guys know with Bitcoin, we can have gigantic moves. This is volatility at its finest. So, just look at this hour right here we had today. We can have big volatile moves. Vasilios, sorry if I mispronounced your name. Thank you for being a member. Said, Tom, look at earnings and overall picture. Cleanspark looks like a good deal at the $16 area. Have rode it since $3 and reloading the boat at this support area. What do you think? So I'm going to pull up the Cleanspark chart. I am not adding to my Cleanspark position for two reasons, and I've been quite vocal about this. I dollar cost averaged into positions for multiple years, and particularly with Bitfarms and Cleanspark, I dollar cost averaged into Bitfarms with a one handle on it, trading between $1 and $1.30 for a year and a half. Cleanspark, same thing, between $3 and $4. I created a position that was much bigger than I ever intended it to be, but the price was just too good. But with all of that said, it's hard for me to buy in at $16. Now, everybody's in a different spot, right? If you're just starting to dollar cost average in, my price target for Cleanspark, and obviously this is not financial advice. You guys got to do your own due diligence and trade on your own conviction. And that is the most important thing that I can say on this whole thing. You guys have to trade on your own conviction because you're going to hear YouTubers say everything under the sun. And, unfortunately, all too many times you're going to hear them say one thing and then 3 days later say the exact opposite thing. So, you're going to be, if you're trading on that conviction, you're going to be buying and selling and probably buying high and selling low. All right. Caught in that kind of a vicious cycle. So it sounds like, this person and myself, I try not to get caught up in that, but, please be careful and bear that in mind. Cleanspark 100 said, is the DXY strength the reason why we're suffering? Cleanspark entering Wyoming to add 4 exahash is the future bullish. So I definitely want to get into the Wyoming announcement that they had on the same day that they reported earnings. We'll look at the DXY. The DXY leveled off a little. I don't know that that's what went wrong today. Obviously there is a correlation between Bitcoin and the DXY. I don't think that's what happened here. I think we get into these situations where, we hit certain, people get leveraged and we hit spots of where people get liquidated. And once the liquidations start, it's a squeeze and it can cascade. And that's why we see these quick moves up and down. Usually if you look at the liquidation heat map, usually this means that it just gravitated right to a giant point of liquidations. So, in this case, with a move down, that means people that were leveraged long got liquidated. They lost all their money. And this happens all the time in both directions. So, we're 17 or 18 months into a very bullish move, for Bitcoin. We have not broken out of that at all. But inside of that, we've now had, I think, 20 to 23% pullbacks. And even inside of those, we have these continuous, all of a sudden, 2, 3, 4, 5% moves out of left field in short periods of time, 1 hour, 3 hours. And a lot of that is just gravitating to these spots where, a lot of people, whales can come in, start the cascade and cause massive liquidations in both directions. And, that's not conspiracy. That's what happens. And they can make a lot of money doing that. If they can sell a bunch of Bitcoin at, let's say, if they do this perfectly, Bitcoin this morning was at 63,200. If they sold over the course of an hour to kind of cause a cascading downward effect, if they sold this at 63,000 and bought it back maybe at 60,000, let's say they started buying back here at 61,000. That's $2,000 of Bitcoin that they made in an hour or an hour and a half. And that happens routinely. It's frustrating for the rest of us who are playing a longer game here. I say the word game. I know it's not a game. It's your real money. But we're in this more for the long haul, and these vicious short-term moves. And then, depending on sentiment, the same thing can happen to the stocks. You can get a cascading effect. And, these stocks moved, the Bitcoin mining stocks today moved to the downside in a brutal, brutal way. So, and it pretty much just erased everything they did early in the week. So if we look at the poll, how long until the Bitcoin hits a new all-time high? So less than 1 month came in last place with 16%. 1 to 3 months, 42%. So that was the biggest number by far. Somewhere in the next 90 days, it seems like a lot of people are expecting a breakout. And, more than half of the people, so that's, from 0 to 3 months, that's 58%. And then we have 3 to 6 months at 23%, and then more than 6 months at just ticked up to 19%. So we do have some people expecting to take this 6 months, and that would not be unprecedented. That would not be the longest period of time before we get that big violent move to the upside for Bitcoin, in its 4-year cycle. I tend to be kind of with the crowd here in this 1 to 3 month range, but having said that, it feels like more like 3 months than 1 month to me right now. And I won't trade on that because you guys know how this goes. As soon as sentiment all goes in one direction, the other thing's going to happen. So that's why I remain long. I do try to dollar cost average in. Now I'm at very near the end of all of my dollar cost averaging because I've been doing it with these stocks for years. So they represent a disproportionately large portion of my portfolio already. So now I am holding. I expect to hold for quite some time, but we'll see what happens. So let's get to Cleanspark to 100 talked about Cleanspark's Wyoming edition. So, inside of all of these earnings reports, and we got a lot of earnings, and we will go through and talk about the different earnings reports. Yesterday we had 2 conference calls going on at the same time. We had Cleanspark and Marathon talking at the same time, so I had to listen to one live and the other one on delay. Not that it makes a difference. And one of the things I want to talk about is, those are the 2 biggest companies. They do consider each other their main competitors, particularly as it pertains to potential acquisitions. And I want to talk about what each of those CEOs had to say regarding acquisitions. And I will say, what they said mirrors what we've been talking about on this channel for a long time. The last 3 months, 6 months, really the last year, but the last 3 to 6 months, as there's been all this talk about potential mergers, acquisitions, consolidations. I thought we got some clarity on that from both CEOs, particularly from the Cleanspark CEO, but from both of them. And I made some notes, so it won't be verbatim, but I want to go through a few of the things that they talked about. We'll talk about stock dilution as well, because that was one of the main things that I was going to be looking for. And I will tell you, I saw some things that surprised me. And pleasantly surprised. I saw one thing that just mathematically didn't add up, so maybe somebody can enlighten me. We'll go through that. I don't know. Well, let's see if I can find that. And I think that, so for Marathon, they talked about the fact that in their footnotes, they talked about the fact that they have remember, Marathon came out with a $1.5 billion at the market offering. So that was, to me, that was, and there were 3 in a row. Marathon came out with a $1.5 billion at the market offering. Riot came out with a $750 million at the market offering. And Cleanspark came out with an $800 million at-the-market offering. By the way, they had just come out with a $500 million at-the-market offering in January, and they announced they used all that, and they're going to do another $800 million, so that's $1.3 billion. So, you know, I saw someone in the comments saying massive dilution machines, and these companies, prior to the halving, there is just no question. A lot of these companies were stock dilution machines, but I will tell you, it has slowed down dramatically, and that's what I was hoping I was going to see. But you know, I didn't. All I can say is I was hoping I was going to see that. I can't say I was expecting to see that. You know, you don't know until you see. But particularly, I will tell you, Cleanspark and Marathon pretty much put on the brakes. I think both of them used. Let me take a look. It was very, very little since the last time that they announced. I have a schedule here. Let me just bring this up. So for Marathon, from the time they announced their $1.5 billion at-the-market offering until March 31st, which was about, a month and a half, they used none of it. So that was very encouraging. Now, I think it was footnote 17, they talked about their subsequent events. And one of the things you typically disclose in your subsequent events is how much of the at-the-market offering you used since the end of the quarter, in that period between the end of the quarter and, their day that they announced their earnings. So, in that month plus, Marathon, their footnote did not agree to itself even. They said they used 3.8 million shares. But on the conference call, they said after the end of the quarter, they used their at-the-market offering to the tune of about $200 million. So they've raised about $200 million from April 1st till yesterday. And in the footnote, the math didn't make sense. So I don't know if that was an error or if I'm just reading it wrong. But in any event, they reiterated on the conference call, they said they used about $200 million after the end of the quarter, but they specifically said they used none during the quarter. So, that represents a slowdown. But Cleanspark, even less. Cleanspark used $45 million of their at-the-market shelf offering, that $800 million shelf offering. So they have just not even scratched the surface. And one of the things that we were talking about on this channel is what I would like to see and what I would hope to see, because they talked about the fact that all their growth is, or a certain percentage of their growth, and they clarified exactly what it was. They're fully funded to here. They're fully funded to there. Well, if you're fully funded, what do you need another $800 million for? And, our speculation was that they were leaving that available for potential acquisitions, which leads me to my thoughts on acquisitions. And this was confirmed by both CEOs. One of them, let me look at my notes. One of them was just pretty direct and adamant. Let's see. So Cleanspark CEO talked about basically the fact that he does expect a lot of the smaller Bitcoin miners to not make it. And he was clear on that. But he didn't really see them as candidates for acquisitions. He talked about private firms being what they acquired, and more so for infrastructure versus, going out and buying a company in its entirety. It's going to be one of these situations where they buy parts. They buy, just like the announcement Cleanspark made yesterday, which I will go through, which is buying data centers. So both companies talked about the fact that that's what they're going to be looking for. They're not looking to go buy, and I'll just call somebody out by name. They didn't call anybody out by name, but basically they said they're not looking to buy public companies. They're not looking to go buy HUT or Bit Digital or these types of things. And they certainly talked about the fact that they saw no real options or potential for the larger firms to consolidate. So they talked about buying smaller companies, private companies, and they talked about buying infrastructure. So I want to go to this press release because Cleanspark really did some clarification on this, and I think it explains exactly what they're talking about, because both Marathon and Cleanspark have been adamant. They're looking for acquisitions. They think this is going to be a very active acquisition season post-halving. The Cleanspark CEO talked about the fact he thinks a lot of the small Bitcoin miner companies will not make it. Marathon CEO, I think it was the Marathon CEO, was talking about escape velocity, essentially meaning if you haven't scaled to a certain point with the halving, you're just not going to have enough gross profit to pay for your overhead. So if you haven't reached, escape velocity is the way he was referring to it, then you're just not going to be able to make it. You're just not going to make it through this period of time before however long this takes. And we're sitting here having a poll. Is it going to be 1 month, 3 months, 6 months, 9 months? A lot of companies just aren't going to be able to generate the cash to make it through that. If you're at 1 exahash or 2 exahash, or some are less than that, I just don't know. And that is what I've been talking about for a while. Those are the companies that I think the market's deeply concerned about. We've mentioned 6 companies that the market sold off somewhere between 90 and 99% from their peaks from the previous cycle, and that are down, 60 or 70% from their peaks from just December, which was, 5 months ago. So while those companies may go out of business, I think they're going to pick through the bones and just buy, the infrastructure that they need versus, and Marathon specifically said, there is no sense in us buying a company's machines, because for the most part, those companies don't have the latest and greatest machines. And so they're really, not worth anything to us, and you'll see most of these big companies have put in gigantic purchase orders for tens of thousands or hundreds of thousands of machines. There's 8 companies that have put out specific purchase orders with a pathway to 20 exahash or greater. So those are the 8 that I hold out. There's 3 inside of that, and those being Marathon, Cleanspark, and Riot, that have talked about even much bigger numbers, 50 exahash, 100 exahash. But to me, the drop-off, once you get past that first 8, which are all looking to get ultimately somewhere in 2025 up to 20 exahash, there's 6 of them looking to get to 20 exahash or more by December 31st, 2024. And then 2 more looking to get there, in the first half of 2025. The drop-off after that is basically cut in half. Most of the rest of them are looking to get to, BitDeer would be in 9th place. They're talking about 11 exahash. And then there's a big drop-off from there down to 8 exahash, 5 exahash, 4 exahash. So I just don't see even, so Bit Digital, I'll use as an example. They're at 2.7 exahash. They have generically talked about they plan to double. And although this is more than doubling, they say they plan to get to 6 exahash. Now, they have a high-performance computing portion of their company that they are aggressively pursuing, and they're putting a lot of money into that. So that may be some of these others that are in the middle. They don't have this plan to get to 20 exahash. Some of them are banking on a more hybrid approach, multiple revenue streams. Even some of the bigger ones are talking about multiple revenue streams. We'll talk about what Marathon said. They expect to get massive amounts of revenue outside of their Bitcoin mining. And I want to get this, I wrote this down because I was surprised they said this. Let me find it. Long term, and this was Fred who said this, so he did not specifically identify what long term means, but he said long term they are looking to have at least 50% of their revenue be from things other than Bitcoin mining. And they did announce on this earnings call, they are now going to have 3 business segments. Their Bitcoin mining segment, which obviously at this moment is the vast majority. It's 90 something percent of their world. Then they have they're going to have a business section called technology, which is going to be comprised of hardware and software. that they sell to others inside and outside of the industry. And then a third segment, energy harvesting. So, and this was interesting. They talked about, obviously the first thing is utilizing a lot of stranded energy, but they also talked about creating an ecosystem, kind of where utilizing the stranded energy, using that energy to mine Bitcoin, and then using the heat that is thrown off from that, as for uses, to heat things that require heating. So almost its own little ecosystem. So this technology division and the energy harvesting division, they're saying long term they would like to see that be at least 50% of their revenue or more. I feel like I have a hard time getting there. That's my knee-jerk reaction to that. So I understand they definitely, that they were crystal clear. They are looking to diversify revenue streams. On the members only, we had a lot of talk about, this concept of diversifying revenue streams versus not, and which one's the better path in the short term, which one's the better path in the long term. And I'm a little bit skeptical about this diversification of revenue streams, particularly as we're, just gearing up to the best part of this 4-year cycle. I'd like to see my Bitcoin mining companies focus on Bitcoin mining, but I do understand, if you can do both, and I'll give you an example. I think Iris Energy is a company that's doing both. They've ramped up their Bitcoin mining in a big way, and they're adding high performance computing, and they have always touted themselves as a data center first company. They believe that they're a better Bitcoin miner because they have better data centers and more expertise in that area. So it's a more natural fit for them to add high performance computing, which are data centers. So they feel they have that expertise. So if you can do both, I get it. Robin, who is a member, said, high risk, low reward, marathon. Duckman said $11, then marathon. So to get all the way back to the original question that somebody asked, on Cleanspark, for me, if you look at this Cleanspark chart, there's two lines that are very close to each other. This green line goes back to 2022. It's at around $13.91. But more recently, back to December 27th of 2023, 12 of the 19 Bitcoin miners that I follow hit their high for the year in 2023. Cleanspark was one of those. That was at $13.56. So you can see somewhere between $13.50 and $14. It did pull back to, let's see, it got down to $13.70 on April 16th. Now, I called on this channel, and we'll see, time will tell. I felt like that day was the bottom. Almost every single Bitcoin miner hit a local low on April 16th. These have all, well, not all, there's one that's broken down, but almost all of these have held up. And I think for most of the Bitcoin miners, this local low is going to be a really, really strong line of support. But you can see this is somewhere under $14. So I do think, it is possible Cleanspark could revisit $14. I don't want that. I'm not wishing that. But if you look at the chart, it did get in that neighborhood. But, if I draw a brand new line right now, you can see another pretty natural, let me make this a solid line that you can actually see. So this yellow line, you can see there's a pretty natural line of support here. We've touched this here, all in here. We did break below it this one time, and then we've kind of approached it. So somewhere around $15 is also a pretty strong line of support for Cleanspark. So I guess, if you buy it at $15.57, again, we never try to time the bottom perfectly. We never try to, well, I shouldn't say we. I do not try to time the bottom perfectly. I do not try to time the top perfectly. And the reason for that is I've never been right about either. So That's why I dollar cost average in, and ultimately, I hope to and intend to dollar cost average out when the time is right. But for Cleanspark, you can see, and if you look at a lot of these charts, you're going to see some pretty strong lines of support that I'll just be very surprised. I will be surprised if we break down underneath this. That doesn't mean it couldn't happen. Maybe we're going to have a much bigger than expected pullback. Maybe it's possible that it's going to take longer than we think for Bitcoin to, have its next leg up. And, if it does, and, if it breaks down, we go to the 1-day Bitcoin chart. We've got this. This box is a 20 to 25% pullback from Bitcoin's recent high, which is also its all-time high. So the purple line at the very top of this screen, on March 13th, Bitcoin hit its all-time high at $73,835. So this box is basically from the top of this box, which is, just under $59,000. That's a 20% pullback. The bottom of this is a 25% pullback. Really, for the last 18 months, the biggest pullback we've had is this one. And it's, if you go from here to here, that's 23.5%. The other four were between 20 and 23%. So, this is basically essentially the same, 23.5%. So this was a garden variety standard issue, 20 to 23% pullback based on what's been happening for the last 18 months. And really, that's since the FTX situation. We double bottomed. We had a big, crash in November of 2022. We retested that in December of 2022. And since then, this chart has been up. We have been bullish on the larger time frames. But, again, this is the fifth 20 to 23% pullback that we've had. It seems to be holding. This is lasting longer. This, I think, now is the longest, sideways period of consolidation. We're trading inside of a range. But we've now been sideways. If I do an info line here, really this day we broke up to this range. That was February 28th. So that's been 72 days. So that's a little bit longer than the longest, period of consolidation, but somewhere around 2 months has been pretty typical for these sideways periods of consolidation. This one's really been frustrating because we've had now 4 times where you can see we have the MACD open here, and I have 3 arrows, yellow arrows. We had 3 times where it looked like we were headed towards a bullish crossover. We got to within, it looked like it was going to happen on this day. It failed. We got rejected. We started all over again, got there, looked like it was going to happen on this day. We failed, got rejected, started all over. And this over the course of a couple of months, failed again. Now this time, the 4th time, we did get a bullish crossover. But you'll see, we never got any momentum on the histogram here. You'll see these very, very, very small green candles. Versus, this is more typical. I mean, look at the size of these candles versus these candles. This bullish crossover never gained any momentum at all. So, even though it happened, it's almost as if it didn't happen. And, here we are almost about to touch, maybe to go back. We're any one wrong day away from getting a bearish crossover. This is on the 1-day time frame for Bitcoin. So, again, all of this just goes to very little momentum in either direction, very sideways for 72 days now. So how much longer can this last? I don't know. So I'm not bearish at all. And I still have all my same price targets for, the Bitcoin miners that I'm invested in. I still have my same price targets for Bitcoin, which, by the way, I think on the low side, I think 150, I think 200s possible. So again, not financial advice. That is my opinion. I think sometime by the mid to late 2025 at the latest, I think we're going to get a run up to 150. To me would be, that would be a low end. I won't use the word disappointing. I'll be thrilled if we get to 150,000, but that's what I expect. And I do expect actually we'll go beyond that. But obviously we have a lot of distance between now and then. We have a lot of potential time between now and then, and a lot, $100,000 almost, between here and there. So, that can be good news or bad news. If you haven't built out your positions and you're looking, is this a good time to buy? Is this a good time to dollar cost average? For a lot of people, depending on where your positions are at, if you like these companies, then it could be a great time to dollar cost average. I will say, I think a lot of people are absolutely losing confidence in the Bitcoin miners. I see more and more discussion about, well, this business model is broken, these companies dilute too much, and none of them are going to succeed. And so that's not the page I'm on. I have always said I do think there will be winners and losers in this cycle. We had Cleanspark come, the CEO of Cleanspark come right out and say they expect to see a lot of companies not make it. So, and both Cleanspark and Marathon talked a lot about, the larger companies, the companies that have scaled up, having a massive, massive competitive advantage at this point. And so, there's growth required due to the halving, right? The reward is cut in half. Now the fees are still the fees, and we did see the fees explode, at one point, and they've pulled back down to reality. So I do think we'll have time to time where the fees get these giant boosts. But for the most part, we're still, the fees are still pretty small. So this was close to a true halving, once the dust settled. So, if the reward's cut in half and your company's not doubling, you're not keeping up with the halving. On top of that, ultimately, we expect to see the Bitcoin network continue to grow. Now, I will say, I want to show one data point because it looked like, so this is effectively every 2 weeks approximately, there's an adjustment to the difficulty level based on how fast blocks are getting mined. So I'll go to this. You'll see, so the next change is going to be at block 844,704. So this is usually about a 2-week period of time. And so since the last difficulty level adjustment a few days ago, it's been taking 9.73 minutes on the average. So they target 10 minutes. So if it's going faster than that, by the time we get to the end of this, if it is going faster than that, the difficulty level will adjust up to compensate for that. If it's going slower than that, then the difficulty level will adjust down. Well, basically, for the last year plus, the difficulty level has just been going up and up and up relentlessly. So if I go back to the chart I was just on, you'll see some red, but look at the bigger numbers. Look at these two numbers in February of 2024, an adjustment of 7.33% increase, 8.24% increase. Those were back to back. And remember, these compound on top of each other. Then a small pullback of 2.9, then a 5.8% to the upside. So we just had a couple of days ago on May 9th, yesterday, we had a 5.6% adjustment downward. So this is what a lot of the Bitcoin miners were hoping would happen. You can see the first adjustment that we got after the halving was an increase. We went from an average of 618 exahash up to 630 exahash. So this is now down to 595 exahash average hash rate in that period, and the difficulty level is pulling back. So I do, a lot of the CEOs talked about on the last conference call, they expect to see, a lot of them expected to see as much as a 20% pullback in the network difficulty level. I did not think that's going to happen. I still don't think that's going to happen, but even any little bit helps. So, just a little bit of sideways activity will help these Bitcoin miners because, like I said, there's 8 Bitcoin miners that have very, very big growth plans. So, but there's 2 things they have to account for. The increase, the reward being cut in half and the increase in the difficulty level. So, as this pulls back a little bit, a little reprieve would be nice, because this has just been a relentless. Look at all this green. Some of these are big numbers. 6%, 5%, 6%, 5%. This is almost 7%, over 7%, 8%. So, and you can see, this is just from July of 2023 as a random point, we were at 385 exahash. If we go back a year, we were at 343 exahash. So we got from 343 up to 630 in the course of 1 year. So now we've pulled back a little. Let's hope, that trend continues for a period of time. I will tell you, some of these larger companies are actually rooting for this not to happen. They want to see the smaller companies get weeded out. And it is the smaller companies by far, the economics of this are much worse. If you're at 1 or 2 exahash or even 3 exahash, the economics of this are awful, because your overhead's your overhead. So if the difficulty level stays up at this rate, the reward's cut in half, and there's not much you can do. If you've gotten as lean as you can get, which most of these companies tried to do going into the halving, then if the price stays down, if the hash rate stays up, even though in the short term that's bad for the large Bitcoin miners, it will drive a lot of other miners potentially out of business, is the theory. Go back to the Bitcoin chart. So we have all weekend long. We're having a little bit of a pullback here. And we finished the week. I'll just put a line right here. This was for the U.S. equity markets. This was the close right here. So I'll switch that later to gold. So you can see from the close yesterday to the close today, that was a 2.9, almost 3% pullback from the close yesterday to the close today. And then from the market open today, where'd the market? So it had pulled back a little. The market opened right here. Almost a 3.5% pullback from the market open to the market close. So, that was a rough day. It showed up big time in the Bitcoin miners. So as I went through these earnings calls for Cleanspark, Marathon, Riot, I haven't listened to the earnings call for Core Scientific, but I did go through their financial statements. So I got some homework left over the weekend. But it is worth noting, there's a big difference in the cost per coin between these companies. And I do think, particularly Marathon and Riot, they got a lot of progress to make. And, Marathon talked about their plan to get where they're going and bring their cost per coin down. But if I just do the math straight out of their financial statements, if I take revenue and then direct cost of sales, which is the bulk of that is energy costs. But, there's other direct costs of sales. So from their financial statements, not their own internal numbers that they, put this in, put that out. Marathon's cost per coin was almost double Cleanspark's. Just looking at direct cash costs, so in other words, excluding depreciation, the direct cost of sales versus the revenue, it was like 90% more. And Riot's wasn't far behind. So, and whereas Core Scientific was very competitive with Cleanspark on a cost per coin. So, that's a big gap to close. So if I look at this, if I say it another way, Marathon had $165 million of revenue. That was their all-time record. Most of these companies set their all-time record for revenue in the quarter ended March 31st, right? We know Bitcoin hit its all-time high in that quarter. And so Marathon had $165 million of revenue. Cleanspark had $111.8 million of revenue. So despite the fact that Marathon did mine more Bitcoin, they did have more revenue. The gross profit, just taking revenue minus direct cost of sales, Marathon's gross profit was $75 million, and Cleanspark's gross profit, again excluding depreciation, was $77.5 million. So, on significantly less revenue, they actually made more gross profit. They have much smaller overhead than Marathon. But the winner in the overhead department, the leanest of all these companies, and I'm comparing Cleanspark, Marathon, Riot, and Core Scientific. Those are the big four. I will compare all of them, and I will do a video on that, comparing them across the board once everybody reports. We are going to get, I'll go to this chart right now. Let me see if I can find it. That's the wrong page. So Riot's reported, Marathon, Cleanspark, Core Scientific, and Cypher have all reported. On Monday, Bitfarms is going to report and TeraWolf is going to report. And on Wednesday, Iris Energy, which is new, they are now going to do quarterly reporting. I think that is critical. So on Wednesday, Iris Energy is going to report and Hut 8 is going to report. For the members, we're going to do a members-only deep dive on Hut 8, and I've been waiting for their reporting to come out. So that will come out next Wednesday. And, these are particularly Hut 8 is, there's an awful lot I hope that we learn from this conference call, because there's a lot of questions that I have about Hut 8. I don't think they've been crystal clear on where they're going. So I'm hoping they give us some good direction. We'll see what happens. So that'll round out, if I scroll down, Hive, BitDeer, and BitDigital, they have not announced a date. So, those are to be determined, and we'll see when they do their earnings. But pretty much all of the larger Bitcoin miners will have reported by next Wednesday. I see Crypto Fever saying, Tom, are you accounting for the fact that 50% of the operational hash rate was offline? I mean, I'm just using their financial statements. So, if their hash rate was offline, there should be no energy cost associated with that. So, that would affect their efficiency from how many Bitcoin they mine per hash rate, but it shouldn't affect their energy cost, right? If you're offline, you're offline. And Marathon did talk a lot about the fact that they had some transformers they called out that were inferior, that failed, and that, those were not the ones they were hosting. And it's a big part of why they talked about, listen, Fred started by saying we are switching from asset light. So I expect this is probably the last time we're ever going to hear him say those words ever again, asset light. That got them I'm not going to argue with their strategy. They got to a certain point with that philosophy, and now they're building out the infrastructure to bring everything in-house. At the same time, they have other ways that they're vertically integrated that other companies are not, including but not limited to the fact that they have their own pool. I will say the CEO of Iris Energy basically said having your own pool is a waste of time, in his opinion. It's not worth the money. But conversely, Marathon talked about the fact that with their specific technology they had, including, let me get the name right. Slipstream. So they have certain technology where they're able to process larger transactions directly through their pool, and they get larger fees associated with that. So they basically said their pool outperformed the average substantially in this last quarter, and they expect to continue to outperform. They talked about smaller numbers, but they said, even if we outperform by 1, 2, 3, 4%, that adds up over time, and that's all money in our pockets. So, that's something that Marathon does that nobody else does. So like I said, all these companies are different, and they did take The other thing they said was for the facilities that were down, for the transformers that were down, they mobilized, took all out of those machines and moved them to their new facilities that they bought and brought them in-house. So they also talked a lot about the fact that that is the acquisitions that they're going to be looking for. They're going to be looking for infrastructure acquisitions, and they expect a lot of these companies to not be able to make it, and left behind in their wake are going to be empty data centers, and that's what they're looking to get their hands on. And so I'm going to go back to Cleanspark's press release that we never got to, because they were a little bit more specific about this. So Cleanspark to acquire 75 megawatts of Bitcoin mining sites in Wyoming. So Cleanspark is moving out geographically. At one point, they were all just in Georgia. They moved into Mississippi and bought a couple of facilities. Now they've moved into Wyoming. They talked about Wyoming. They talked about a few things, an abundance of energy, good energy pricing, and they talked about just the political environment in Wyoming was very favorable, they felt, to Bitcoin miners on a going forward basis. So obviously, they're going to start here, but they spoke very highly of Wyoming as a place for, potentially a lot more, additions, and they need more infrastructure. So 75 megawatts, just a few points I want to hit on this. Cleanspark today announced it has entered into a definitive agreement to acquire 2 Bitcoin mining locations in Wyoming with 75 megawatts available of power for cash payments of $18.75 million. So I think that works out to be a pretty good deal. The agreement is anticipated to close in 45 days, and the sites are expected to add over 4 exahash per second once fully operational, and they did say that will be in 2024. The company plans to break ground on the new facilities shortly. So they were asked a question in the question and answering section. Were either of these facilities Bitcoin mining companies? And if so, are you just going to pick up where they left off? And they did say one of these 2 sites, it's 2 separate sites, one of these 2 sites was a Bitcoin mining facility. But that company took their machines with them and their infrastructure with them. And Cleanspark said they certainly don't want other people's older machines, and they don't even want their transformers. They said, and I'm going to find, let me see if I can find in my notes here exactly what they said. They talked about the fact that they have an inventory of 50 megawatts worth of transformers and switch gears. They have kept an inventory in anticipation of purchases like this. So they are not going to use somebody else's stuff, if you will. They're going to build this themselves with their equipment that is tried and tested with all the facilities that they've built themselves over the past. So they said we have no supply chain issues. There's nothing standing in our way. In fact, we have the inventory of these transformers and switchgears already. They have the machines already ordered. So, they're set up to do this. And this is the type of infrastructure I think these companies are going to be looking for. They're certainly not looking for old, outdated machines. And in a lot of instances, like Cleanspark mentioned here, and like Fred specifically mentioned, he would never have bought those transformers that failed, he said, and I'm going to use his words. He said they were Chinese transformers. They were no good. We never would have bought those. We will, we're in the stuff that we're doing, we'll make sure it's of the quality that, we don't have these issues going forward. And that's why they're looking to bring stuff in-house. The other piece of this 75 megawatts that has been added here by Cleanspark is there's more that they can add to this. So the company plans to deploy a combination of S21s and S21 Pros. They go on to say the agreement includes the potential to expand the sites by an additional 55 megawatts. So that would be a total of 130 megawatts. Combined, the 2 facilities would add 7 exahash. So 4 right away, 3 more to follow. That's an additional 7 exahash. And then it says, to Cleanspark's hash rate, as the company continues its path of sustained progress towards 50 exahash. So like I said, there's a few companies. We have Riot that's talked about 41.8 exahash is their 2025 target. We have Cleanspark that's talked about 50 exahash as their 2025 target. And we have Marathon that reiterated on their call that 50 exahash is their 2024 target. So, we have some companies ramping up in a very big way. And that's why I think, we all probably can agree those three have pulled away from the pack. That doesn't mean they're the three best companies, right? There's a lot of other companies that I know a lot of people are invested in. I'm invested in some different Bitcoin mining companies, but they are, from just a sheer size and scalability standpoint, they have kind of run away from the pack. Now, Riot, the one thing that we can say about Riot, they went from 12.4 exahash in April's monthly operational update. They went to 12.6 exahash. So they've added 0.2 exahash year to date. So they're talking about getting to over 31 exahash by December 31st. So I think the market is very, very much looking for Riot to start proving that they're going to do what they have been talking about. Now, to their credit, Riot's building their facilities, in Corsicana from, dirt they started with. So they're building it from the ground up. They've energized the first 400 megawatts. So I think we're going to start to see machines come online. So they're going to need to get those machines online, and then they're going to start to need to prove that they can mine with a certain level of efficiency that's, at least competitive with their peers. So those are a couple of the things that I think the market is looking for as it pertains to Riot. And on the flip side of that, Riot has a massive amount of liquidity and, basically no debt. So they're a company with a very, very strong balance sheet. So again, there's pros and cons to all these companies. Riot and Marathon, and now Cleanspark is approaching these types of numbers. Again, they have $1.5 billion of assets. Now that's split about half and half between current assets and mining equipment, not current assets. Against almost no, I think they have $75 million in total liabilities. Let me see if I can find that. Okay, so if I just, this is Cleanspark's 10Q. So you're going to see cash and cash equivalents, $323 million, Bitcoin, $358 million. So they have $687.7 million of current assets, $1.5 billion of total assets against $74 million of current liabilities. So even if you were to take, or again, of total liabilities. So if you were to take their current ratio, right, they've got 12, they're 12 to 1 here or more current assets versus current liability. This is a very, very, very strong balance sheet. Now, they talked about the fact they did this through dilution. And I know a lot of people are frustrated with dilution, but the other thing they mentioned is with approximately $1.5 billion in dilution, they've brought themselves to nearly a $1.5 billion to nearly a $4 billion market cap company. So, their point was their stock dilution has been used in a very accretive manner to the company and to its shareholders. And so that is something that I agree with. And, I don't think Cleanspark's the only one that's done a good job at that. I know people have their misgivings about at the market offerings and, all this stock dilution, but this is a very capital intensive industry. And so, take that for whatever it's worth. Obviously, Cleanspark has been a standout. Their stock has outperformed all the other Bitcoin miners significantly over the last 4 months and really over the last year. It's not even close. So we'll see if some of the other companies can start to perform and catch up. I do think there's still even room to the upside, even with this performance. So let's go look at real numbers. Year to date as of last Friday, so that doesn't include this week. And again, I think you're going to find out that most of these guys just kind of went sideways this week, up a little bit or down a little bit, despite the fact that today was awful. So I'm going to interrupt myself. If you guys could do me a favor and please smash the like button, I would appreciate it. It helps the stream in real time. I did demonetize again this stream so that you guys didn't have to have 100 commercial interruptions as we're talking live here. So please do me a favor and just smash the like button. So you can see this is from year to date as of last Friday. You've got Cypher was at 0 year to date. That's the second best performer out of all the Bitcoin miners. You got Cleanspark up 46%. Everything else in the red. Some of these deeply in the red. So, you know, from stronghold down, you've got 54, 60, 62, 64, 69%. These are the companies I think that, you know, we had Cleanspark talking about. He felt a lot of these companies maybe were not going to make it here, even really kind of to the end of the year. So, you know, I'm guessing, you know, if I don't want to put words in his mouth, but, you know, certainly the market is starting to price in deep concern over these companies that are down over 50% year to date in the same period of time where through last Friday, Bitcoin was up 48% year to date. So, you know, Bitcoin's up 48% and, you know, and he's down 69%. Those two things are not moving in the same direction. Kay is asking, Tom, what about Bitfarms, Cypher, and Iron? So Bitfarms and Iron will be doing their earnings next week. One on Monday, one on Wednesday. Cypher has already done their earnings. I did not compare them with these four. I want to compare the next group together against each other because I think Bitfarms, Cypher, Iris Energy, and TeraWolf, to me, that group of four is that you know, if I'm grouping these in my mind, I put those against. So I'll try and do similar charts comparing those four's performance against each other. And, you know, Cypher, I thought, had a very good earnings report. I think the market liked their earnings report. I will say, you know, everything got beat up. What did Cypher do today? They were down 5.8%. So we'll look at that in more detail, but they had strong numbers. Their numbers are a little more confusing. They have some joint ventures going on, and which they account for using the equity method. So things are a little bit more confusing with Cypher, but we'll dissect it and look at those. I'm very, you know, I own Bitfarms and Iris Energy, or they now prefer to be called Iron. So, you know, I have shares of stock in both of those. Iron is a much newer position for me. Bitfarms, my Bitfarms position has been a buy and hold and dollar cost average for several years, all the way through the entire crypto winter. So I'm still very optimistic about Bitfarms. Again, not financial advice, but I will tell you, I'm very optimistic about Bitfarms, but I do think they have a lot to prove. And the market is going to make them prove it. And I will also say I don't have high expectations, whereas I had a lot of high expectations for certain of these Bitcoin miners for Q1 2024, so the period ended March 31st, because Bitcoin was on such a big run. The combination of the companies, so the companies that geared up and got a lot of exahash online, simultaneous with, you know, Bitcoin having its run to its new all-time high, I was expecting very good results, and we've gotten some very good results. Bitfarms is one step behind them. They've ordered all of their equipment. They're going to spend the next 90 days, if they stay on plan, they're going to spend the next 90 days doubling from, you know, they came into the year at 6 or 6.5, and they intend, you know, the first step along the way is to get to 12.4. They said they would get there by June 30th, you know, but that didn't come in the first quarter. So I don't hold out high hopes for a big bump on earnings, but I will also say, you know, I really don't understand why any of these stocks, you know, run or get beat up on earnings when we get monthly operational reports and most of the important information is in there. Now, there's a few things that are not in there, you know, so if, you know, you see monumental stock dilution, if you see a huge non-cash compensation and other stock compensation to management. I know a lot of investors despise that, and those are some of the things that you see in the quarterly earnings reports. So just to talk about that, according to, so for Cleanspark, Marathon, and Riot, Core Scientific I don't think has any non-cash compensation, right? They just came out of Chapter 11, so that looked like zero. In fact, it was a negative number. I don't know if that had to do with some shares that were vested or not vested. I don't know. So I'm calling it zero. Cleanspark had $9.8 million in non-cash compensation. Their total G&A was about $26 million. So Riot had $32 million in non-cash compensation, and Marathon had $52 million in non-cash compensation. So I know a lot of people, particularly, I don't know if it's everybody out there, but I know a lot of people in the comments section in our live streams and on the videos complain about Cleanspark's management paying themselves all this money. But, Riot's non-cash compensation was triple what Cleanspark's was, and Marathon's was more than 5 times what Cleanspark's was. Now, like I said, the leanest company, the lean and mean company out of this group was Core Scientific. They had basically no non-cash compensation. Their general administrative expenses were $17 million. That was the least out of all the companies. As a percentage of revenue, their overhead was 9.4%. That was the lowest out of any so far. So they seem to be doing all the right things coming out of Chapter 11. They have a strong gross profit. The largest gross profit so far has been Cleanspark's. They had 69% gross profit margin. So I'll tell you, that's going to lead them. Their direct cost per coin, again, this is not their all-in cost per coin. In other words, all overhead and other things. Their direct cost per coin was, according to my calculations from their financial statements, they mined 2,031 Bitcoin in the period ended March 31st, the 3 months ended. So just doing the math, that's $16,888 was their cost per coin. So even if that doubles, you're talking $33,000 or $34,000, even if there's not a pullback in the global hash rate. So they're still hugely profitable, right? They're still, depending on what Bitcoin does, at a 40 or 50 or 55, maybe a 60% gross profit margin, in the next 30, 60, 90 days. So even post-halving, Cleanspark has a very healthy gross profit margin, it would seem. Core Scientific isn't far behind them. Marathon and Riot's cost per coin was high. I do think there's a lot that both of those companies intend to do about this in this next quarter and in the coming quarters. But again, I think the market's wanting to wait and see. They're not going to price this in ahead of time. At this point, post-halving, the market, I think, wants to see this move in Bitcoin, and they want to see these companies perform very efficiently and do what they say they're going to do. So I think that's what the market's looking for with most of these Bitcoin miners. Just to take a look at a couple of other things that happened, in the world here today. So this is in the U.S. U.S. consumer sentiment dropped to a 6-month low on inflation and unemployment fears. So if I go, I wanted to seek against. Okay. So the University of Michigan's Consumer Sentiment Index released Friday in a preliminary version dropped to 67%, 67.4%. I think they were expecting 76, not percent, 67.4, and they were expecting 76. So this was a gigantic miss. So it's still higher than it was a year ago, but it's, this was not good for the market. The market didn't have a great day. I don't know that this is going to be hugely important going forward, but each little piece of negative news, builds and feeds on itself. So then another thing that came out that's crypto related, and it looks like this isn't really going to end up happening, but Congress basically voted. Right now, the way the SEC has this set up is that banks can't really be custodians for cryptocurrency. So Congress passed, let's see, the House of Representatives passed this joint resolution, HJ Resolution 109. 207 Republicans and 21 Democrats voted yes. So, here in the United States, believe it or not, that's kind of bipartisan. I know that seems overwhelmingly in one direction, but to get to 21 of one party to break and go with the other is pretty big numbers. But the president came out and said he's going to veto this. So they certainly don't have the numbers to withstand that. So essentially, I'm trying to find the spot, but essentially the Congress's argument is by precluding or prohibiting the banks from being a custodian of Bitcoin, you're forcing it into less reliable hands. So, that's the argument, and I do think Congress, has been adamant they want to get some regulations and move this in the right direction. So whether that ever happens or not, I don't know. So they did pass this resolution, but the president has come out. I think I have another article here. The president came out and said he will veto this. So it's not to the finish line yet. Here, House votes to erase the SEC's crypto policy while the President Biden vows to veto. So, I think that's pretty much dead on arrival, I guess, based on that. On more optimistic news, Jack Dorsey says Bitcoin price will go beyond $1 million in 2030. So we've heard some of these predictions. We know Jack Dorsey is, he's, I don't want to say pro-crypto. He's positive cryptocurrency. He's been in the ecosystem. I do think it's weird. So Jack Dorsey believes the price of Bitcoin could reach over $1 million by the end of 2030. His outlook aligns with that of other industry leaders, such as Cathie Wood, who predicted that Bitcoin could go as high as $1.5 million. I thought it was weird. They said former Twitter CEO and now founder and backer of several crypto projects, Jack Dorsey, believes that Bitcoin will go past the $1 million mark by 2030. They're doing his bio here, and they failed to mention that he's the chairman of the board for Square or Block, right? That's the main thing that he does with his time right now. Neither here nor there. This is a big... So not everybody is gloom and doom, right? We do have some people out there saying more positive things. All right, in a new segment that I call my nonsense statement of the week, make of this what you will, and this is just for fun. This was an article, Math Olympian tries to solve blockchain AI trust dilemma. So there was a particular statement in here. I have too many buzzwords in one sentence usually means somebody saying nothing. That's my own personal opinion. So this person might be a genius. In fact, he did get like a master's. Let's see. It took him just 2 years to get a PhD from the University of California at Berkeley. So this is obviously a smart dude. But sometimes people get too caught up in their own buzzwords and concepts. So my silly statement for the week is this one. Quote, deploying advanced sampling methods and game theory to incentivize integrity and minimize computational demands across decentralized networks. That's a lot of words. that's a lot of buzzwords all in one sentence. So, from a company called Hyperbolic. So, there's no meaning in this other than just for fun. I can't help but laugh when I see statements like this, and there are so many. The internet, I don't know if people are using ChatGPT or some other. When you get this many mishmash, and they actually do one of my other red flags is in here somewhere. Let me find it. Here we go. He's trying to solving a key problem at the intersection of the two fastest growing but most complicated areas, blockchain and AI. Anytime somebody says they're doing something at the intersection of blockchain and AI, and the other one is Web 3.0, I'm always a little leery about whatever comes next after that, because all that sounds like a lot of words and that may or may not necessarily mean anything, in my personal opinion. So, not really anything important there. Then, in other news, outside of Bitcoin, Ethereum reverts to inflationary asset following fee-reducing Talkin upgrade. So transaction fees are 4 times lower on average following the recent Talkin upgrade, which is a good thing. So I think this will, this will increase layer 2 activity on Ethereum by lowering these transaction fees. So, I think a lot of people argue this was a good thing for Ethereum, but a part of the previous upgrade to Ethereum was that a portion of the transaction fees get burned, and it created a situation where Ethereum was deflationary really since it's been a couple years now. So now with this Talkin, I think it's called Talkin upgrade, this has flipped the equation. By reducing these transaction fees, there's less Ethereum that's getting burned. And so now the supply of Ethereum is now growing again, and it is now inflationary. So that's what's happening at the moment. This could flip-flop back and forth. I see DEFCON 2 saying Dorsey is a Bitcoin maxi. DCA's Bitcoin. And John Q. Public is saying ETH's fees are too high. So, hope this is saying transaction fees are 4 times lower. I don't know where that leaves them. Maybe that's still too high. And Midway saying a bad week for Ethereum price, unfortunately. And Midway is a member. Thanks for being a member. And Robin, who is also a member, said Ethereum has been a big disappointment. I am not an Ethereum person. I think there's too many massive, they're calling them upgrades, but really changes in the programming coming over the next several years. And to me, that's a little disturbing. So I guess we'll see how it all plays out. I do think that ultimately we will get an Ethereum ETF. I did say all year I don't think it will be in May, and now it looks like it's almost certainly not going to be in May. But I do think we will get one. And, I don't know that it will be the same boom that it was for Bitcoin, but maybe that will be, a nice boost in Ethereum if and when that happens. All right, so let's just take a look at the Bitcoin chart. I'm going to wrap it up. I've gotten some complaints that our live streams are too long. I'm also flying solo today without George. So hopefully I touched on everything. I know there was a lot of stuff going on this week. I know today was not a good day. We're looking at the chart. We had that 1 hour. This is the 15-minute chart. So these 4 candles are 1 hour. We had a big move to the downside very early in the day. Bitcoin stayed down all day. The Bitcoin miners had a slow burn down all day. So it was a rough Friday, but I think you'll see when I put out the weekend update that most of the Bitcoin miners were by and large, just by the end of the week, the price action for the week was pretty much sideways for the most part. So, I'll get all that information out this weekend, and more to come on all of the earnings reports we're getting. So I've been going through those. We'll do some deep dives on those as well. So try not to let today get you down. It's just one day in a long Bitcoin marathon. So hope everybody has a great weekend. Thank you so much for joining us. To the members, thanks again. Special thanks for being a member. And to everybody else, special thanks for subscribing. If you have not yet subscribed, we're almost at 21,000 subscribers. So if you enjoy this content, please consider subscribing to the channel. Other than that, everybody have a fantastic weekend. And for the members, we will see you Tuesday after the market closes for the members only live stream. Thanks again. Have a good weekend.